Nvidia also hitting a fresh intraday high. That's today's leader. But the recent tech rebound shows a lot of breadth beyond just that name. Deirdre Bosa has more in today's Tech Check. Deirdre, I also love this whole chips are the new oil thing, because a lot of us might go, no, don't say that, because oil's been terrible lately. We don't want to, to go quite that way. Anyway.
Right. But I mean, that's the oil now. So chips are taking its place. And just as oil once powered industrial growth, semiconductors, they're now fueling the AI boom. So right now, the market is placing its bets accordingly. And let me sum it up with this chart. This is Melius's AI chart of the week. They call it semis as the new oil. So here's the reasoning. Back in 1980, energy peaked at around 30% of the S&P. Today, semis and semi-caps, this is the companies that make the machines and tools to produce chips, they make up 12%. Nvidia and Broadcom alone, they account for 3/4 of that. And this all raises the question, what if we are still early? Market action suggests that that might be the case. The semi-trade has been broadening out with names like AMD, Micron, Marvell, ARM surging over the past month, outperforming even Nvidia and Broadcom. And that helps explain why this semi-rally feels different. It's not just about chips for chips' sake. It's about the infrastructure to run AI at scale. So in other words, compute demand that's powered by training, inference, and storage. Some of the other themes have been renewed as well. Sovereign AI, as the geopolitical overhang in the Middle East, at least in the eyes of markets, has been somewhat blunted. Another overhang that's been softened, Callie, if not resolved, is the China threat. Remember, earlier this year, DeepSeek's R1 model rattled the AI trade, triggered a broad sell-off in the AI trade. Tech stocks, they have now climbed back from those levels. So this feels like a new phase of that trade that we've become familiar with over the last few years.
Right. An important part of what's happened here is that this concern that AI investment was going to peter out or even just kind of drop at the margin seems to have not at all happened or be taking place this year.
Right. As well as sort of it became cheaper or more efficient to actually run AI. Right. And it turns out that inference demand makes up for a lot of that pre-training demand that we saw in the early years of the AI boom. Something that I will mention, Kelly, we'll talk more about this yesterday, though, is potential crack in this trade could be, some of the cold water that's been thrown on reasoning models. They're supposed to take huge amounts of inference compute, and like that Apple paper we talked about a few weeks ago, throwing a little bit of skepticism at that idea.
We got to do that tomorrow, because I still don't understand the inferencing, the reasoning part. Like when I ask it a question, is inferencing and reasoning part of that, or you know what I'm saying? I need an explainer.
It will be perfect for you tomorrow. We just released our latest Tech Check take, which dives into that exactly. So
perfect.
We'll bring you that for sure.
All right, Deirdre, thanks. Deirdre Bosa.